Hi everybody, it's Dave Fisher. I'm here with Peter Hurwitz from Envision Bank. He has graciously agreed to do a couple of videos with us on loan products, interest rates, credit. Peter is my go-to guy for everything mortgage related, loan related. Thanks for being here, Peter.
Welcome.
Peter, first thing I want to talk about is interest rates and credit. People don't really understand that higher interest rate equals more monthly loan, but it's a bit more complicated than that, isn't it?
It is, Dave. So, the first thing is everybody asks me, what is the interest rate? And there is no one interest rate that fits every borrower. And rates change daily. Rates vary depending on a number of criteria, including credit score, the amount of down payment, the property type, the length of the loan, whether it's a 30-year, 20-year, 15-year. So, there is no one rate that fits every borrower.
Okay. One of the things that always confuses me, and still confuses me off and on, is the difference between, I often see interest rate and then I see APR, and it's a different rate. Could you tell us what the difference is?
So the interest rate is the actual rate. In my opinion, that's the most important thing for the customer to look at. The APR is an index or a disclosure figure. So it's calculated by taking the interest that you would pay over the life of the loan, adding certain categories of closing costs to that total number, and then dividing it back over the term of the loan, say 30 years. So it would only be accurate if the borrower holds the loan to full maturity, which is highly unlikely.
Okay. So the most important thing then for a new borrower, person looking to buy a home, is the interest rate itself.
Look at the rate, compare rate and closing costs.
Rate and closing costs.
APR is not always going to be the same from lender to lender.
Okay. And when we talk about someone's credit, because earlier you mentioned their credit, what factors affect someone's credit?
Obviously paying bills on time, the relationship of your credit balances to the credit limit. For example, if you have a credit card with a $5,000 credit limit and you have a balance of $4,990, you're pretty much maxed out on that credit card, and that can hurt your scores. Take that a step further. Let's say your credit card company now applies the monthly interest charge. It can then put you over the credit limit, and that's really bad. You don't want to have excessive inquiries, other companies running your credit. A handful is fine. I see situations where a borrower goes to apply for a car loan, and on one day the automobile dealership will have 14 different lenders run your credit and have those inquiries appear on the credit report. That makes it look like you're desperate to borrow money, and that can hurt your score.
Wow, good to know. Good to know. Obviously, there's a lot of information here, and it seems like every individual person's situation is different.
Absolutely.
Because we can't cover everything in a short video like this, would you be available should someone be interested in purchasing property and before they really get started want to talk to you about their current situation and what they can and can't afford?
Absolutely. I welcome phone calls all the time. I can be called in the evening and weekends as well.
Great. Thank you very much. And please contact myself, Dave Fisher, or Peter Hurwitz at Envision Bank, and we will help you find that home that you've been looking for. Thanks.